What's up, everybody? Welcome back to Bold Business. I'm your host, Philip Michael. And before we start, we have a very special guest here today, the one and only, the CEO of Bold TV, David Grasso. David, how's it going?
Well, this used to be my show, so it's great to be back. But Philip, you're doing a marvelous job. Thank you.
Thank you, David. Now, let's get right to this week's trends. Now, of course, everybody's heard about what's going on with Bitcoin and crypto, so that's what we're going to talk about. Bitcoin and other cryptocurrencies have gone crazy in the last year, whether it's as a hedge against inflation or just an interesting new way to invest. People are buying it up. One of the largest platforms for new crypto investors, Coinbase, just IPO'd, causing crypto to go kind of mainstream. Now, it opened at $381 a share with an $86 billion valuation. Come on. Completely shattering expectations. So stars like Kevin Durant and Nas were early investors in the platform, are both expecting millions in profit. Also, experts expect the stock to rise and fall with the crypto market, which has been, pretty volatile. But with so much faith being put into it now, is crypto becoming a safer bet? David, what do you think?
Nobody knows. And in fact, we were talking about this before the show began. Anyone who sits here and pontificates about how great crypto is probably doesn't know a lot about crypto. Might be good, might be bad. We don't know yet.
We don't know because it's so nascent. So anybody that claims, as you said, to know where it's going to go is really just speculating. But either way, now that it's mainstream, we can expect to see more activity. What that does to the volatility, what do you think?
And I think that we need to separate one of two things, Philip, which is that crypto, right? Currency is one thing, right? And blockchain technology is another. And people tend to just mix those together, right? So blockchain or block lattice, which is the next thing, right? So all these new technologies are the wave of the future, right? The way we transact, the way we make everything cyber secure is going to be built on this ecosystem. Now, does that mean Bitcoin is going to continue to go up in price? No. There is this definite difference between cryptocurrency and blockchain technology. And furthermore, there are different types of cryptocurrency. Bitcoin, Ethereum, Dogecoin, etc. I'm more of a Ethereum fan, but that's a conversation.
That's a conversation for another day. All right, bullish on Ethereum. But now, with all the excitement around the crypto space, you should probably know how it works. Cryptocurrencies are mined, but not quite like gold mining. Basically, you can set up a computer that solves complex equations that will lead you to one Bitcoin. In the past, you could mine Bitcoin on a regular computer, but now that millions are in circulation and the number of Bitcoin is limited, it takes a lot more energy to do. The computers used for crypto mining today use as much electricity as the entire country of Argentina. All right, so should we consider these environmental factors when we invest in cryptocurrency? David, what do you think?
Well, energy consumption is really important, right? One time in college, I remember they quoted us that our ice consumption in the United States was the same as the entire country of Nigeria.
Wow.
So there are definitely different ways to think about this. This is a problem. Mining for cryptocurrency uses a lot of power. The other view on that is that regular banking uses a lot of power. So do we start saying like, oh, this uses a lot of power, so we shouldn't use it? Environmental impact is a major thing, especially while we're celebrating Earth Day right now. But that doesn't mean this is the entire story.
Right.
So it's usually a lot of times when you read the news, you're only getting half the story. And I feel like Bitcoin mining is one of those things where, sure, it uses a lot of energy. Is that the whole deal? Not necessarily. Let's take it half truth.
Exactly. Again, there's a little more nuance. It's a nice talking point. It'll get headlines, but there's a little bit more nuance required. Like, if you look at, unless you're a vegetarian or vegan, something has to die for you to live.
Of course.
And it's just one of the byproducts of life operating as it goes. So I think excellent point there, David. Now, switching gears a little bit, the descendants of a black family that once owned an oceanfront resort in Manhattan Beach, California, could get the property back from the government. Here's the story. The city took the resort from Charles and Willa Bruce 100 years ago and forced black beachgoers out of town. Now, Los Angeles County is working with state lawmakers on legislation that will return the property worth about $75 million to the family. The descendants are considering whether to take a direct payout, from the county or take the land and lease it to the county, effectively becoming their landlords. I want to hear your thoughts on this, David. What do you think?
Well, first of all, I hope this family decides to become the county's landlord.
Exactly. That's exactly what I was thinking. Don't take the money. Own the land and own the money.
So fundamentally, this is the right thing to do, right? It's not like they're taking it from a company or private landowner. They're taking it from the government, and the government is the one that started this discrimination disaster. So they need to make it right. So Los Angeles County, which is now majority county, needs to make it right. Okay. Number two, I agree with you. They should keep the land and then set up a system where the government is paying them payments to all the descendants of these nice people who had their land unfairly taken away from them. And when we really think about land ownership in the United States, and this is really your shtick, Philip, not mine, right? A lot of the inequality, right, in this country, especially white-black inequality, stems from land.
Yes, absolutely.
And land ownership, right? So if we are to right that inequality, we need to focus more on really getting historically disenfranchised black families into the game to own land.
Exactly. The number one driver behind the wealth gap is the absence of ownership, and compounded by that is 90% of millionaires come from real estate. And of course, you know, you're a real estate guy also.
Not as big as you, Philip.
Well, you know, but again, we can understand and appreciate the nature of the asset class. And I think this is a really important step in the right direction. Granted, this is not a political show, but from a policy standpoint, are there ways we can sort of increase the inflow of more minority ownership in terms of whether it's collaborating with banks? What are your thoughts there?
There are so many programs to increase home ownership. We have to be careful that we're putting the right people who can actually afford their homes in homes,
yes,
right?
Of course.
But assuming these people can afford their homes, right? This target population, whatever it may be, white, black, rural, urban, right? There are so many policies that can help increase home ownership in a target demographic.
What's one, for instance?
So if we're talking about urban African Americans, there are definite mortgage programs that can be backed by the government that can help spur land ownership. And as you do, Philip, every day, there are many black Americans living in our inner cities who can afford home ownership.
Right.
And it's really the government's responsibility to help people who want to own homes to help them do so.
Yes.
And we've already seen that in rural areas with the Department of Agriculture loan. And really, there's so many programs like that. So I think when we talk about reparations, or when we talk about inequality, or when we talk about anything like that, cash is really not the solution.
Right.
It's paths toward ownership and an ownership society.
Yes, because if you get a lump sum, you see this all the time when people get tax returns, you get the lump sum of cash, but if you don't understand how to manage the cash, invest it, make it grow, you're just going to lose it as quickly as you got it. So the path is get people involved in ownership. And I love what you mentioned there, David. I think there should be a way to get more people into owning assets so they can create the generational pathways to sustained wealth.
And we have the programs for rural people, and they deserve that help. I'm just saying that we should create similar programs for urban people as well.
Yes.
So, I mean, this country, if we cannot continue on the path we're on without having an ownership society, if you look at our crazy politics, if you look at a lot of the instability in our society, it comes because people don't have skin in the game. So what they need fundamentally is home ownership. And there's all sorts of things that are statistically correlated to home ownership, including education, well-being, and a host of other things related to happiness. So to me, if we want to talk about inequality and we want to talk about leveling the playing field, we have to talk about land ownership.
You have to talk about land ownership, and the beautiful thing about land is that they're not making any more of it. So,
no, it's like Bitcoin. It's limited.
It's limited supply, and you gotta own the piece of the earth, and you'll be set.